Hello, I'm Dan Chodan with Trout CPA. Today we received a new simplified forgiveness application along with a full updated forgiveness application, and we wanted to provide a brief video here to show you some of those changes, quickly look at those new forms, and provide you with some new tools to help you with your PPP loan process. First off, I wanted to review a few of the changes that we have seen as a result of the PPP Flexibility Act, and these changes are now making their way into this new application that just came out today. And the biggest change there, of course, if you've been following this at all, was the option now to choose a 24-week period instead of an 8-week period to be able to spend your PPP funds. So that was updated in the application. Additionally, in the application, the thresholds for spending on payroll and non-payroll costs was adjusted to be a 60%, 40% threshold. So certainly a lot more we can spend on non-payroll costs and still qualify for forgiveness. The other thing that was updated here within the applications was the June 30th full-time equivalent restoration deadline. That was extended all the way to the end of the year, but can also be an earlier date. It's either the end of the year or earlier, the date of the actual application submission, that you can have rehiring and restoring those full-time equivalents. So a lot more flexibility there as well on the timing of when you're going to be bringing people back and when you're going to be hiring and getting back to full staffing. Another change that are in these applications as a result of the PPP Flexibility Act was the additional FTE Reduction Exemptions. And without reading through all of what's here, basically this gave us a lot more flexibility on just issues that were outside of a borrower's control. If there was employees quitting, if there was employees that wouldn't come back when they were offered to be rehired, all of these exceptions are not going to harm the borrower when it comes to PPP loan forgiveness. So that was just expanded in the PPP Flexibility Act and is now included in these two new applications that are available to us. The other big new change in the Flexibility Act was a new safe harbor for full-time equivalents, which still seems very broad. It wasn't defined much clearer in these two applications. But what it is saying so far is that if we were unable to operate between February 15th and the end of our covered period at the same level of business activity as before, then we are not required to do FTE calculations. We're not required to do a restoration. So this seems like a pretty broad catch-all, and so I'm a little bit nervous about this one because it does seem so broad, and I'm curious to see what more they have to say about this, maybe in future guidance or future FAQs. But at least at this point, this does sound like something that could be very useful for some of our hardest hit borrowers that just haven't been able to do what they would normally be doing. And this is hopefully a very easy out for everybody as a result of the PPP Flexibility Act. So now this as well has been implemented into the new applications today. Some other updates that we didn't know from the Flexibility Act that are now making it into these applications are the payroll caps on forgiveness. So these caps before had been limited at $15,385. But now, with the extension of the period from 8 to 24 weeks, for employees, that cap is expanded all the way up to $46,154 if the 24-week period is selected. It stays at the $15,000 amount if we are electing to use the 8-week covered period. So that's important to note when we're doing our planning calculations. If we're trying to file for forgiveness sooner and get that out of the way, we are still going to be limited the way we were before. Owner's pay is not expanded quite the same, though. Owner's pay is going to be capped at 2.5 months worth of their 2019 payroll. That's a maximum of $20,833, which is a 2.5 months of $100,000 calculation. And that's only going to be if we select the 24-week period again. If we stay at the 8 weeks, we're still stuck with that $15,000 number. So that was a big question coming out of the Flexibility Act that's now been clarified here. One other thing that was clarified within the applications was health insurance for owners has been further limited. We knew that it wouldn't qualify for self-employed, Schedule C, and partners, but now we're seeing that the instructions are telling us that we also can't take it for owner employees of an S corporation. So if you had been including these in your calculations before for those S corporation shareholders, their healthcare costs aren't going to count as health insurance because they are already included in their compensation. So this does bring up a good point. If the S corporation owner is being paid at a rate over the 100,000, they've already hit their cap. But if their payroll is lower for whatever reason, if they're maybe at a $70,000 salary and they have another $10,000 of health, well then their entire compensation is actually $80,000, not $70,000. So depending on their pay level, it still could be included in forgivable compensation. It just can't be included separately as health insurance costs. So that was new information that we got today. Another piece of new information was a limitation on owners' retirement contributions that qualify. We had previously seen that, again, self-employed, Schedule Cs, general partners would not be able to include those amounts in forgivable compensation. But newly today, we also saw this phrase here that contributions on behalf of owner employees are now going to be capped at 2.5 months worth of the 2019 contribution amount. So that's new information right there that we hadn't seen. There hadn't been a cap on that prior. So if you were trying to really maximize and do a huge profit sharing contribution in the covered period, that wouldn't necessarily be helpful, at least not for the owner's portion, only for the employee's portion. So that, again, some more new information that we saw today. The biggest new thing today, though, of course, was this separate forgiveness application form that's much shorter. And this new easy form can be qualified for in several ways, and they're right here. First off, if you're a very simple PPP borrower and you're self-employed, independent contractor, or a sole proprietor, and you filed with no employees when filing for your loan, then you can use the easy form automatically. You don't have any reductions or FTE calculations that you needed to do at all, so the fact that you can use this form just makes sense. The next two relate to if you are able to have FTEs at the same level, or if you qualify for some exemptions, you can also use this easy form. So if you didn't reduce your salaries and wages for any employees by more than 25%, and didn't reduce the number of hours for those employees during that covered period, then you can also qualify for the easy form. And the same is true for the rate of pay reduction on the next one, but also incorporates this caveat that if you are unable to operate during the covered period at the same level of business activity, that other exception that was added because of the PPP Flexibility Act, if that applies to you, you can also use the easy forgiveness form. So essentially, that qualifying line really becomes for those businesses that are able to not have FTE issues during the covered period or qualify for some exceptions. They can use the easy form. If you have to use the full form, it's going to be because you either cut people's pay rates more than 25%, or you just weren't able to maintain your staffing levels and avoid some FTE issues, and that long form is still going to be the result for you. So there's a little bit more details on this in the instructions for the application itself, but this lays out the main areas here to be concerned with. So let's go ahead and jump out here and just look at the applications themselves really quickly. First off, I wanted to show everyone our website, and we got a lot of questions about these resources. These resources should be linked in an email that went out to clients, but they can also be found here on our website, and lots of other resources as well as it relates to COVID-19, as it relates to funding programs that may be available for businesses and tax law changes. So within our COVID-19 resources page, you can click on the stimulus package and PPP loans tab and just get to everything Paycheck Protection Program related. And already here we have the updated forgiveness applications, the instructions, and our worksheets to be able to just help you simplify that process of filling this out. And we have this both for the full long form and for the new easy short form. So again, if you go to our website, you're going to be able to see all of this, but hopefully you saw it as well in an email that you received. taking a quick look now at the forms and the instructions that are out there. Originally, we'd received one forgiveness application form and instructions combined. Now the SBA has split those out into 2 documents for each. So don't forget that there's those instructions out there, line by line with definitions. As you have questions going through this process, that's going to be your best resource to see this information and see what does this definition mean, what does this line do, and where does it go. So don't forget those instructions are out there. They're much shorter here for, of course, the short form. We're basically just looking at the first page of the original application, and that's been simplified down. The section down here that had the reductions in it has been removed, and we're simply tallying up our costs and making sure that they're limited either by the loan amount itself or the payroll requirement, that we can't have more than 40% of non-payroll costs in there. So this is the way that's limited here. So very few limitations on the short form. A page for our certifications to be able to make those very similar, and then our demographic optional information on the last page. So not an awful lot really to talk about. It's just a very simplified version of what was out there already is now the easy form. We created just a quick worksheet to help you in this process. The form that's out there from the SBA is a fillable form, so it's actually a useful form now, but we thought we would still do a quick form in Excel just to make this even easier and more practical and do this calculation reduction for you. So even for the easy forms, this is out there on our website to be able to enter the information you have and get a quick answer. And on this one, we only have a couple of tabs, just one tab for the form itself, and then one tab just for that key checklist of, can I use this short form for forgiveness? And make sure that you can check one of these boxes, that one of these applies to you, that you essentially don't have pay rate reduction issues and don't have full-time equivalent reduction issues. So that's the easy form really shortly. And again, here we've split our original forgiveness application into 2 forms now as well. The 5-page application form itself is laid out very similarly to the original, and the instructions have been taken out and created a separate document here just with a few updates that we have already discussed. So I'm not going to look at that in any more detail here. Instead, I'll show the detail on our updated worksheets form to be able to do these calculations for you. They made the short form a nice fillable form, but the long form is still not fillable, still doesn't do any calculations for you. So if you have to do the long form, I'd highly recommend you use this tool to be able to pull your information and do the calculations rather than trying to do any of this manually. The main change here on the first page of the application is down on line 10. That 75% requirement for payroll was now reduced to a 60% requirement. Otherwise, the first page of the application hasn't changed. Our Schedule A worksheet for the loan forgiveness application is fairly consistent. On the top half of the page, we're still accumulating costs in a similar way. But now on the bottom half of the page, of course, we've talked already about expanded full-time equivalency exceptions and reductions that are out there. So if you qualify for any of these new safe harbors or can check these boxes, we're going to be in a lot easier situation to be able to not have to calculate the full look-back periods and the full covered periods if we can take those. So those were the new items that were added here for that new safe harbor, depending on if you were able to operate at the same level during the covered period as you were before February 15th. Still just a very interesting one. I'd love to think that applies for most of us, but it's seems so broad and seems so vague that it's hard for me to just hang my hat on it. I'll continue to stay tuned on that one and interested to see what more comes out about that and how this gets interpreted, but hopefully a good one for everybody. Our Schedule A worksheet page also stayed very similar here in the new application. Of course, the thing that's worth mentioning is that our cash compensation again for each employee can be higher than that $15,000 cap now. It can go all the way up to $46,000 if we select the 24-week period, if we needed to use those extra costs. And that's going to be true for both tables here. The bottom of the page changed just slightly. Again, as I mentioned earlier in the PowerPoint, the safe harbor that existed before has been updated now. So instead of a June 30th deadline to rehire everyone, that deadline now is December 31st of 2020. But they also clarified this here as it's, again, the earlier of December 31st or the date that the application is submitted. So a lot of flexibility to fix your full-time equivalent levels by a rehire restoration date. And you're fully in control of when you can submit this application. Once the bank opens that process, we'll have a lot of flexibility. So being able to utilize this as a short period to bring those people back, and maybe it's a seasonal thing, maybe it's something where we can bring people back in the fall a lot easier, and that's going to be helping us to get to this full-time equivalent level. So again, just adds that much more flexibility to how we can be able to get rid of any full-time equivalent issues. Our owner's compensation tab here is virtually the same. Again, we just have these new limits based on the longer period that we might be able to take up to $20,833 for an owner instead. Again, still at $15,385 if we have an 8-week period elected. Our wage reduction tabs, again, only apply if you have cut someone's salary or rate of pay more than 25% during a covered period. So hopefully you don't have to read through this and look much at this form. And our last two tabs here are just calculating those full-time equivalents. Unfortunately, the new guidance and the new applications today didn't give us a lot of additional direction as far as the 8-week period, the 24-week period, the detail or any examples of those calculations, and nothing new on the look-back periods. So at this point, we still have our original items in here, and we'll be interested to see if further guidance comes out on this. My personal opinion here is before you take the time to go through all of this in the minutia and do this manually, we are hearing great things and seeing some reports that are out there. We have ADP, we have Paychex, and I'm sure there's other payroll providers that I just haven't seen yet that are putting out full-time equivalent reports for look-back periods, for covered periods, and doing some very quick and slick comparisons. So I would say first look to your payroll provider, and hopefully they're doing some good reporting for this information. And if that's not working, and if you don't have a safe harbor or an exception to get out of this, then, well, you're stuck doing it manually or stuck working with us to help you do it manually. So, but again, I think the first place I would like everyone to look is to the payroll companies on those reports, because they're hopefully going to be very useful for us in this process. One last thing I wanted to cover here. We've talked a lot, shown some updated forms. For the most part, the loan forgiveness forms haven't changed an awful lot. We had those few updates, some more safe harbors, of course, a much simpler EZ form, but for the most part, they haven't changed in a broad way. And it creates an interesting situation for certain people, for certain aspects of this, because we actually had somewhat of a loophole in the way this forgiveness calculates. So I just want to throw this as a potential help, last resort for anyone that can't restore and avoid some of these reductions in one way or another. And so it's worth mentioning, if this is the final application at this point and there's no more coming out, it would appear that we have a pretty significant loophole where our head count could be way down. We could have significant salary reductions, but we just now can overspend because we have a 24-week period and make up for all those reductions. So just a really quick example how this loophole, I'll call it, seems to work. If we can just add some more payroll costs, because now our payroll costs are much higher over a 24-week period than over an 8-week period, we can see how this loophole works. Previously, we were being reduced by this FTE reduction quotient, and we weren't getting the full amount of our $100,000 PPP loan. But what I've done now is just add a bunch of additional payroll costs because we have a longer period. We have 24 weeks. These reductions are still here. the reduction for the headcount, the FTE reductions, is still here as well and calculating, but because we have just significantly more cost before that reduction takes place, our total number still ends up being more than the loan amount, which is, ultimately the maximum we can have forgiven is our loan amount. So it's just a unique scenario where you could have laid off significant portions of staff and then just had enough qualified costs over a 24-week period that those headcount reductions don't end up mattering when we actually have a calculation done. So just a very interesting scenario when you look at 24 weeks. Obviously, this goes against the spirit of the law and what they were trying to accomplish with protecting paychecks and keeping people employed. But at this stage, it looks like there's a lot of flexibility and a lot of options, and even this loophole for individuals and business owners that are filing this form to get full forgiveness, even if we have problems with FTEs. So something to keep in mind. We'll be interested to see if they would change this at all. I would tend to think they wouldn't at this stage, as I'm sure people are going to be starting to use these applications pretty quickly, and banks will be opening up soon, I'm sure, to be able to get these things filed. So we'll see what happens between now and the end of maybe the 24-week period if someone were to use this method, this loophole, if they would try to close it at some point during that time. I just want to take a chance also one more time before wrapping up here to show you our website and our resources that are here. Once again, we have our COVID-19 page. So as you have some questions, we do have a great frequently asked questions page up here under our Paycheck Protection Program. We have these application worksheets that I've quickly shown you, the applications and the instructions themselves. So I hope that's going to be a great resource to you, and that's where you can find it. If you do have any other specific questions, or if you need assistance with your PPP application, please reach out to your contact here at Trout CPA. We're going to continue monitoring the PPP program and other available business assistance that's out there and keeping our clients informed. Thank you so much for taking the time to watch this video, and I hope you have a great day.